What is going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. We don't have the camera on today, but that's all right. Either the charts coming through or we have a slate up. We're going to be joined today by Tim Ord of the Ord Oracle. Really looking forward to that. He'll be on the second and third segment. It is very cold here. I think this is the only place in the nation besides for maybe the southwest of California that doesn't have at least some snow or sub-freezing temperatures. Kind of crazy. Of course, North Florida, particularly the Panhandle, got up to about 6 to 8 inches of snow last night. That is kind of insane. It is freezing here, but let's see what we got going on in the market, okay? Kind of interesting stuff, right? Yeah. Yesterday, I think, was super unique. Now, of course, I wasn't on yesterday. We had Tommy on, of course, with our guy Sean Edwards from Direction. That was a great interview. Strongly recommend checking that out. Of course, we've been looking at some leveraged Direction ETFs recently. But you kind of had a switch, right? We had been kind of noting that the Russell had been gaining far more than the other indices, right? So you had maybe the SPY was up, well, who knows, like 0.3, 0.2%. Same with the composite. Dow Jones doing a little bit better, and the Russell was moving significantly. So we went into one of the leveraged ETFs for Russell, URTY, and yesterday got kind of smacked in it. Now it's recovering a little bit right now. Beginning of the day was kind of tough for the Russell, but you know that momentary kind of shift in the breadth is interesting. You know, and what I had kind of been assuming was going on with that. You know, these big companies in the SPX, really the top 7, had been getting so much money, you know? And so this idea is like, okay, maybe this is kind of overpumped. Let's see, can earnings really keep up with this kind of stuff? Let's get in to some of these smaller caps in the Russell. And I think what happened essentially is Netflix did extremely well. Okay, we did a leveraged ETF from Direction on Netflix before earnings. Obviously gapped up pretty heavily. We can just pull up, kind of see what happened with that. And I think what that told them, then additionally, you know, you had this, essentially this promise from the Trump administration to build out some of the data centers, and all the companies that had been in that industry are the ones who are continuing to get pumped in the past. And so it's kind of like indicating to the markets like, hey, these big boys still have ways to go. It's probably safer than your smaller caps, right? That you'd find in the Russell. So what's the point of shifting out? You know, personally, that's kind of what I think is going on with it, because you see that pivot right around Netflix gaining, obviously with Oracle gaining, some of these other larger companies moving to the upside. So kind of interesting that we're back in the, you know, just that kind of spread that we had been having. Now, the Russell is doing a bit better right now, comparatively speaking, to the SPY. You have the SPY up about 0.24% at 607.89. You get the composite trading off 0.17% at 19,974. I believe this is from some news from Sky Hynix. Yeah, SK Hynix is obviously a big supplier for chip companies. Believe you'd have NVIDIA down off 0.54%, ARM getting really shot, which makes kind of sense, right? Because, I mean, the semiconductor realm has been moving up because of its inclusion and necessity, really, with building out AI capabilities. And ARM, you know, I mean, these are consumer semiconductors in some certain sense, right? You have Micron off about 3.84%. The consumer semiconductors got, you know, we're kind of lackluster over the past few years. Any semiconductor company that really blew up on anything substantial were going to be ones that are contributing to AI build-out, you know, like NVIDIA. So you get ARM coming off 8.68%, NVIDIA off about 0.54%, kind of bringing down the composite a little bit with NVIDIA there. Let's see what Tesla is doing, just curious. Off 0.93%, honestly not too bad. You have the Dow Jones Industrial up about 0.76%. You have the Russell Futures up about 0.31%. The DXY coming down quite a bit, huh? Trading at 108.01. Of course, we made that high at 110.17. Now, obviously still elevated from what we were seeing at the end of last year, or right before the end of last year. Of course, you had 100 low in October. Let's see, crude oil's trading off about 1.3% at 74.46. You have that gold contract off about 0.3%, 2,762, with copper up about 0.58%, silver off about 1.81%. Man, how about that? Steel Dynamics, I thought they had earnings, and it looks like they didn't do didn't necessarily impress. Well, you know, you had an actual EPS 1.36 compared to 1.28. I didn't read the earnings for it, but I'm supposing forward guidance might have been a little shaky if that's the case, or just didn't impress given the market cap. We can take a little look into that maybe after Tim gets off. Roku still doing exceptionally well. Fubo coming back with a vengeance. Vuzi off 2.36%. You know, some of the big stuff that I'm really looking at right now is going to be TSSI. Okay, so that's TSS Incorporated. These guys really stand to make quite a bit of money with these data center build-outs, kind of like a little bit of like an SMCI, but not corrupt and marred with scandal. You know, you're trading at a 19 billion market cap right now, and SMCI, obviously, we've really had a slow burn. Of course, you get to the low of 1725 on the information that they weren't going to be delisted, come back up around that $48 area, and we're petering out. Now, I want to compare really the earnings of SMCI to TSSI, and like I said, when we get back, or rather when we get done with Tim Ord, we'll take a look deeper into TSSI's kind of financials. Very interesting stuff. Does not have any analyst coverage right now, and I think they probably do stand to do something well. Obviously, pretty extreme PE, but we can talk about maybe why that is. And then a market cap of 384 million. And then additionally, I want to talk a little bit about SPCB. This is Supercom Limited. Some very weird stuff going on with this stock, and I don't know exactly what to make of it at this point. You have a market cap of 30 million, PE of 14 on it. This is an Israeli company doing essentially analytical AI for IoTs. They've expanded very heavily into the US, but they basically had what is essentially a debt-to-equity conversion. They're trading about 15, 16 right now, and they were able to convert some of their debt into common shares for a bank that held some of their debt. They sold it was about 100,000, which is 7% of the current float, but the shares were at something like 43.76. You know, and you can look at that two ways, right? I mean, is the bank concerned that they're not going to have the money to pay the debt back, so they want to be able to get some exit if they need? Does the bank think they could take off if they weren't saddled with this debt? It's kind of hard, I think, right now to parse out what this is, but it's an insane movement for the day. Obviously, you have a high right there of 1895. Folks, stay right there. We'll be right back with Tim Ord after this break.